Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson with a breakdown of the action in today's session, October 1st, where we saw losses across the board for the major indexes, though stocks were able to close off lows. And Ed, a lot of major headlines today hitting the market.
Yeah, a lot of headlines, and we'll get into all that. I do also want to take a look at three stocks, CBOE, Ryan Specialty, and AeroVironment.
All right, three standouts from today's session. We'll check in on those. But first, let's take a closer look at the major indexes. The NASDAQ today down 1.5%. Same for the Russell 2000 small caps as well, off about 1.5%. The S&P 500 closed the day down less than 1%, coming off of its lows, while the Dow was the least hard hit here, down about 0.4% by the end of the day. And Ed, not only do we have this strike that just started on the East Coast, Texas up to the East, Gulf Coast to the East Coast on the shipping front, but then we have some new headlines out of the Middle Eastern war situation.
Yeah, Iran launched nearly 200 ballistic missiles, maybe more, against Israel. That's in retaliation for some of the things that Israel's done versus Iran's ally, the Hezbollah terror group. So now the question, that didn't seem to cause much damage. The question is, so stocks came off their lows after the attack actually happened. There'd been anticipation it's going to come and it's going to come, and then the second time is when that's when the attack happened. It came off lows. It did fade again. Now the question is, will Iran do more? Will Israel retaliate? I mean, we're looking for things, honestly, since October 7th, that horrible day, 2023, the violence has sort of steadily increased, over time. So there's always that question, when will it really hit markets? It was down today, but hasn't really devastated markets longer term. And I just have to see about that going forward. Also, another negative news is that Apple, there were some negative headlines about Apple, so that's bad for the major indexes. And then there was economic data maybe a little stronger than people would have expected. So there would have been reasons to sell off anyway if it wasn't like this big attack between two Mideast powers.
Right. And honestly, between all of the headlines that you mentioned, and again, the port strike, one could have seen the market be down a lot more than it ended up being down today. Wouldn't you say, Ed?
Yeah, I mean, it's
Go ahead, Ed.
the NASDAQ was down in support of the 21-day line, but we also had and the S&P and the Dow, they just came off of closing highs and not that much. You're right, it could have been a lot worse. So that was positive. You don't know if it's going to continue. You can say, oh, everything's over. Well, we don't know yet. But it did seem, if this is, with all those negative headlines, it did seem like the market held up to it pretty well.
Okay. Well, moving on, let's next take a look at the 10-year Treasury yield. How did the bond market react today?
It came down to just under 3.7, then bounced off of that, and really didn't do too badly today. So there was that. Crude oil had a big jump, but it came off of highs because there were certain things. That's something else to keep in mind, is that some things rose, but you never know if that's going to last on the flip side.
Right. I guess while we're here, we can check in on gold as well, up 1% on the day. It's been on the rise and it's been outperforming the S&P this year, Ed.
Absolutely. And today there was a pop in gold. It came off the highs. And so that's always the issue, is that to what extent do you react to things, buying or selling, when you see something that might just fade off? I mean, it may just drop from the headlines immediately and the market reverts back to where it was, or it could spiral into something a lot worse. And so so you don't know. It makes it very difficult to make buys and sells. You have to respect your sell rules and other things, but it's hard to take a lot of action on a day like today, because it could all revert right back, very quickly.
Yes. Well said. Okay. Well, with defense stocks in focus, here's a look at the ITA, Aerospace and Defense ETF, outperforming on the day, up 1.2%. And now that relative strength line clearly in new high territory.
Yeah, this is one way you can play the aerospace defense, and this has been doing very well. Sort of like gold, it's been outperforming for a while now, looking pretty strong. A lot of defense names were doing well today, and we'll take a look at one.
Yes, we will. Okay, and one more ETF to check in on here, and that's financials. What are you seeing here, Ed?
Well, it looks like it's just sort of consolidating along the 21-day line. I mean, looks like it could form a base, and you can imagine a lot of things. There's a lot of banks that come out, but we have insurers that we'll talk about, but there's a lot of banks that have earnings, in a week or two. So definitely an area to watch here. Beyond, as you know, growth investors definitely don't want to have that blinders on where I'm only looking at tech. There's a lot of other
Right.
things like aerospace, industrials, financials, etc.
Utilities.
Utilities.
That growthy area.
That's almost an AI sector of the
Yeah.
market, but maybe a safer area of the market than other AI plays.
Totally. Okay, well, let's check in on CBOE and the Financial Services Specialty Group, which is now ranked number 22 out of the 197 groups that we track, up 2.4% on the day. And Ed, we had an orderly pullback here over the last couple of weeks for CBOE to a key level, that 10-week line. There's even a base here on the weekly chart with some tight action. So very orderly after that prior run up here, and now getting a bounce.
Yeah, so nice. It was difficult to maybe buy that. If you didn't buy CBOE as it came through the, say, the 40-week line, that would have been tough. But here it is.
Right.
Now it's formed a nice little base, base on base formation, right in there, bouncing off the 10-week line, 50-day line today, yesterday, sort of breaking this short trend line. So you could use that as an early entry in this flat base on base. Nice action. Maybe there's just a lot of trading. There was the volatility index, maybe a lot of trading today. I will note that its rival CME, its crosstown rival CME, broke out of a base today. So that was nice action. These aren't tremendous growing companies, but they've had steady growth in earnings for both of them. CME doesn't have, I think CBOE has slightly better relative strength than
Yes.
that. So I wanted to that's why I wanted to select this one, but just nice to see that kind of action. Again, this is not going to be rip roaring maybe like some, but it's nice to have things like this in your portfolio that are sort of steady performers.
Right. And CBOE has an RS rating of 81 versus a 55 for CME. And the RS rating looks at all stocks in our database and compares the price performance over the last 52 weeks with a little bit more weighting in the most recent quarter. So there's a look at that. And we also really like looking at the RS line. Excuse me, the RS line, which measures price performance versus the S&P 500, and that's on a daily basis. So the RS rating, great for screening and ranking stocks, and then in terms of timing your buys, sometimes a number of times that relative strength line can come into play in addition to the price and volume action and where a stock is trading versus its relative strength and moving averages. Okay, let's go to RYAN. You mentioned insurance stocks. So here's a look at one. Ryan, I've got to say, this has been a little tricky in its ascent, Ed.
Yeah, it hasn't always been easy because a couple had a breakout a couple of times. We've seen this with a lot of stocks this year, where it just seems like these stocks, and you go, "Wow, they're 50%," but how could you have made money on them? And yeah, this is just this one, but you can look at the prior bases, and there's been all sorts of stuff all around there. Where do you play that? I mean, it's just sort of odd action in there. But yeah, it came up. It had sort of flirted with some entries, faded off, and then moved up really strongly. It almost formed a handle. You could sort of call this as a pseudo handle.
Right.
It did get above the official buy point today. It got above the top of this pseudo handle, but you probably could have bought it as it broke the downtrend of this handle today. Again, yeah, tricky there. The relative strength line not at new highs, for sure, but it is higher than the last several weeks, so that's trending up. Strong earnings growth. I mean, this is a little bit better growth. That's the insurers and the insurance brokers, they're charging a lot higher rates, and that's been paying off for investors at least. Not so much fun to be paying it as a ratepayer, but nice action here. And there are a lot of group peers that are doing well as well.
Yeah. And speaking of tight action, I don't know how many weeks is this, like 8 weeks tight, 7 weeks tight, 8 weeks tight as a base has formed. I don't know if I've seen that actually in a base, 8 weeks tight or
A lot
seven
of
weeks
things were
at
going
least.
on in the market during that time. It wasn't like the market was going flat necessarily. So that
Yeah,
was pretty impressive there.
exactly. Yeah. August and September were a big roller coaster ride. So yeah, very impressive there. And now this talk with a strong start to the week here and potentially actionable. Okay, let's round things out with a look at AVAV, AeroVironment in the aerospace and defense group, testing a breakout here. We have a couple of resistance areas or pivots perhaps that we can look at. And as we looked at the ITA defense ETF, AeroVironment definitely wasn't alone here. You have RTX making a move today up 2.7%, Lockheed Martin up 3.6%. There were others
There
as
were
well.
others, yeah. HFs, yeah,
NOC,
there was all sorts of things that were moving nicely. I think the question you have to do with all these things is like, will they, if peace breaks out in the Middle East, haha. But if you saw things fade off, one could imagine that they fade off again. I mean, that's always the risk. So just like we say, don't put all your money in AI stocks, or wouldn't say put all your
Mhm.
money into, say, the defense sector. But it
Right.
flirted with this 211.44 handle buy point. You could argue that there was sort of a handle within that handle, or just a downward sloping trend line within the handle, or even from the top of the base. There's all sorts of things you could have done. Uh,
Mhm.
the handle is pretty messy. It started when there was a big contract that it won. And then a few days later, the earnings weren't so great. And so it's just pretty big. It's not the
Yeah.
prettiest thing. It'd be like if I were flying a drone. It wouldn't look very pretty. But it bounced back, and you see that there's been some pretty solid volume today, and a couple times when it was moving up. So that's a little bit better in that front. So uh, the chart isn't perfect by any means. There's definitely been volatility. That's something you have to watch out for. Some of those other names
Mhm.
that we looked at might be a little bit less volatile, but this one has been a big mover at times. But again, like a lot of stocks in 2024, it's been hard to hold through that first, next base, because it goes up and down quite a bit.
Right. And I tons of good points. And I think one especially good one to reiterate is the fact that we don't know if this is going to be short-lived or if this is going to be a sustained move. And I think one example that we have to go off of, and clearly it could be different this time, but when the news of the war in Ukraine broke out, right? Like we saw this temporary run up. Maybe it was a couple days, couple of weeks for the group. And then it just seemed like they went sideways for a very, very long time. I mean, here's a look at Lockheed Martin. You can see in this chart, you can point it out here, February, March of 2022. And then that's basically where the stock peaked for months and months and months, Ed, until recently. Perhaps a change of character here for a number of these names, but that would be the concern is this going to be short-lived momentum, or is this another group that's going to start trending higher?
Yeah, that's a great point. It's also a great point because Ukraine didn't calm down. It wasn't like, oh, Russia backed off, everybody's fine. No, the war just kept on going. It's probably as intense as it's ever been, and it didn't have the big payoff for defense stocks. So that's just something don't know how these stocks are going to react, even if events on the ground might seem favorable for it.
Right. Well, no doubt there is momentum in recent months in this space. So we'll continue to keep track of it. Well, thank you, Ed. And thanks everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live. And we hope you join us, investors.com/IBD Live, for all the details there. We'll see you in the morning. And then we'll also see you right back here tomorrow after the close. And one more thing that I do want to quickly add, if I could, we have our weekly swing trader status update show today, live at 5 p.m. Eastern, 2 p.m. Pacific. So check that out with our very own Justin Nielsen and Chris Kessel to get the swing trading perspective on the current market action. So we'll see you there at 5 and on IBD Live in the morning. Bye, everyone.